Hi, JJ here with The Art of Value. Today I'm going to look at Warren Buffett, Berkshire Hathaway's recent buy of TSM, Taiwan Semiconductor. They bought several $billion worth, over $4 billion worth, so it's a significant buy. I'm going to look at why they bought, why they might have bought now, and why they're interested in this. So let's have a look at what they actually did. It's become a top 10 Berkshire Hathaway shareholding. They do have subsidiary companies, they own a lot of companies. However, for the shares of this company, it's become top 10. Of course, Apple's in top place with over 40% of the share portfolio, and it's only 1.39%, but significant. It's $4.1 billion. That's how big Berkshire Hathaway is, that they can buy $4 billion, and it only makes the top 10. Bank of America is number 2 at 10%. You can see on the screen there their ranking of holdings, but TSM is a new buy last quarter. Bought, and I don't know if they bought any more. They might have bought more in this quarter. We'll find out. But so far, it's number 10 on their list. So significant. Why did they buy this? Let's get into it. So I don't profess to be an expert in this company, but let's look at what they do. They are the world's largest semiconductor chip manufacturer in the world, and their clients, their customers include Apple, AMD, and Nvidia. So they are a massive player with a big market share. One of the interesting things of why Buffett and Berkshire might have bought this company is, of course, they own a big chunk of Apple. So this is buying Apple's supply chain, buying into Apple's supply chain. So Buffett in the past has said he doesn't really understand technology. It's not in his circle of competence. Given the size of the purchase and Apple's a customer, I think Buffett probably does understand this company, and he can see the importance of it in the supply chain. And so they've basically buying Apple's supply chain here. Partly, that could be one reason. Okay, here's the way I understand what they do and how they do it. Correct me if I'm wrong in the comments, because other people will know more than I do about this. But the way I understand it is that Apple might design a chip, Nvidia, AMD might design a chip, but TSM manufactures it. They invest a huge amount, billions and billions, into the factories, the foundries, and they will make the chips for companies such as Apple. And so they're the ones that are staking the money to build the actual factories, and Apple might say, we want to design this chip and we want you to make it, and they do that. So this is how they've come to have a big market share. They own the foundries that manufacture this huge amount of chips for companies like Apple. Again, as I understand it, TSM is the biggest player, big market share. They do have competition in Samsung, Intel, and global foundries, but TSM is perhaps the most advanced. Over 50% of TSM's revenue comes from making the 5 and 7 nanometer chips. So very small chips, powerful chips. Now obviously applications for these very small chips, the 5 nanometer is becoming the most popular pretty quickly. It's incredibly small. It's just fractions of the width of a human hair, for instance. And this implies that it can fit more transistors onto a chip, and obviously with things like smartphones, smartwatches, the smaller the better, which has been happening over decades. And so the barrier to entry for other companies to get into this business is very high. Obviously the facilities needed, the foundries needed, very expensive. The innovation in technology, and they are at the forefront, is very hard to come by. The barriers to entry are high, which would be another thing that I think Buffett is interested in. I mean, that's one of the things with value investing in particular. The barriers to entry, that's something to look for, to have a moat, to have a big market share, and that's something you'll see with other Buffett companies as well. Can competitors just come in and compete quickly? Can they build foundries and have the expertise to do that? No, this industry is not like that. There are only a few players, and TSM's at the forefront. So around 80% of TSM's business is for smartphones and what's called high performance computing. So we think of cloud computing, which is of course growing hugely over time. So smartphones, this is why it's been such a good business over the last couple of decades and continues to be, and the growth, as we'll see, has been very good. And another reason why Buffett will be interested in this, can see a very good future. More and more applications for chips is going to be needed in the future. I mean, it's one of those growth areas. Even through recessionary times, it should be good. Again, it's similar to Micron technology, which I'm an investor in. We have areas like automotive. We think of self-driving cars coming up, or increasingly self-driving. We can't call them that yet. Electric cars, all the electronics, are going to need more and more chips. We have high-performance computing, which is cloud computing. Smartphones, which again is a huge part of TSM's business. The Internet of Things, where we have objects that are going to have chips in them, more and more objects. It's just a growth area. Some of these things are growing very fast. These things have a good future, and it's why TSM is probably Buffett sees as a very good prospect for the future. One of the possible red flags that we look at a company is that customer concentration. With TSM, their top 2 customers represent well over 30% of their revenue. So some value investors in particular have a rule that if customer concentration is over 10% for one customer, that's a red flag. So here, Berkshire and Warren Buffett has probably seen that as a risk and as an acceptable risk for their investment, obviously, or they wouldn't have invested. Apple is a massive customer, so if anything goes wrong with Apple, if Apple has a problem with smartphones or smartphone sales in a recession, then that's going to affect them too. Buffett sees that as an acceptable risk. What might be in their favor here that Buffett might have seen is that there's not a lot of alternative. So TSM is, in terms of innovation, at the forefront. So can Apple really go anywhere else at the huge scale? It's probably a symbiotic relationship here. TSM, Apple's a big part of their business, so really it's this supply chain that's kind of locked in. There are some risks in terms of where it's located, which we'll talk about soon. If you're watching on YouTube, please consider hitting that like button to help with the algorithm and to give me that little dopamine hit that we all do crave. Thanks. So let's look at that for a second. So the geopolitics of it, the location, obviously TSM, Taiwan Semiconductor, based in Taiwan, some big manufacturing power there, and of course, China says that Taiwan is part of China. They have for a long time. And so this is a risk, and there's a lot of geopolitical tension there. Obviously, Buffett thinks that's not as big a risk as we think. And Charlie Munger has talked about that in terms of investing in China as well. He's talked about as long as civilized nations can get on together to a certain extent, he doesn't see that as a huge risk. And so maybe this has rubbed off a bit on Buffett to see that it's not such a big risk. In any case, I think that's a big reason why the share price went down. It went to a big spike, but it's plummeted. This tension between the US and China over Taiwan. So that is a risk that I think a lot of investors just do not want to go near this company, but obviously Buffett or Berkshire, the people at Berkshire, the investors at Berkshire, it's more than Buffett, think that it's an acceptable risk again. Another thing to think about is CapEx, capital expenditure, which is huge in these types of companies. And I know this from Micron Technology. It's similar there where they spend a huge amount on manufacturing. Every so often they have to keep ahead. They have to update their foundries, update their technology, which takes a lot of money, which is one of the reasons that a lot of companies don't do it. And there's barriers to entry. It's very sophisticated, very expensive. They have to keep building new facilities, which costs a lot. Put simply, they have to spend a lot of money, but they also make a lot of money. And they do have to keep at the forefront. I've made a couple of videos lately about ChatGPT, OpenAI. So if you think of applications like that in the future on our smartphones, on every device where we've got these kind of probably virtual assistants which we can ask anything constantly. So we're going to need a lot of memory, the most advanced memory, which again, that's why I'm interested in Micron Technology, but also TSM. There's going to be no shortage of demand. Partly to address the geopolitical situation, the US has started to want to bring some of this chip manufacturing home, the CHIPS Act. A while ago, there was an announcement by Tim Cook from Apple, that there'll be TSM is building facility in the US, but these things can't happen quickly. This is a multi-year investment, so it's not going to just like snap your fingers and suddenly it's all in the US or anything like that. These tensions will last for a while, but that is something that's changing. They're starting to think about it. Apple's also starting to manufacture things in India, so to diversify away from this China geopolitical tension situation. Their reinvestment will continue. They've already got plans for 3 nanometer and 2 nanometer and putting tens of billions of dollars into reinvestment to build new manufacturing facilities. So this is going to be ongoing, and there's just huge amounts. But again, that goes to the barrier of entry. Thinking about barriers to entry, really tough to get into this business and compete and to stay at the forefront. So let's have a look at the actual stock price. If we look at this 5-year graph, we can see above the low of 5 years, it's 153% and 106% in 5 years, but below the high. It's 38% below the high. So it did have that peak. So Warren Buffett's been buying it after that peak. It's gone down like many other tech stocks, and that's where Berkshire started to pick it up. So if we look at the 10-year graph, we can see that it's 452% above the low, and over that time in total it's 383%. So a very good performer over that time. And below the high again, 38%. So again, Warren Buffett picking it up when he saw a good opportunity on the way down, on the down slope, not on the way up, not being momentum after a peak. This is not investment advice at all. If I look at the Guru Focus, which is the service that I use here, it's saying that the Guru Focus value is $128. $129, it's significantly undervalued. And obviously Warren Buffett has thought so. It's actually higher than when they bought. It's gone up a bit, partly when Berkshire reveals they bought something, the price tends to go up. You can move the market, but it's significantly undervalued according to, as I said, the service Guru Focus, which shouldn't take as investment advice at all. Do your own work at all times. So this could be a good clue about why Buffett was interested. Obviously that he thinks it's undervalued, but why has the market pushed it down so much? And Buffett being interested, obviously he thinks longer term. He's thinking 5-10 years more, and so Wall Street fluctuations and sentiment, the market fluctuations and sentiment, he's not really interested in, apart from opportunity to buy. So there's two factors which I've already talked about. There's the geopolitical situation. The market was scared. Sentiment was absolutely low. I've made other videos about China being uninvestable. This isn't China, but China's definitely involved in here, or China sees Taiwan as part of China. And the other situation is possibly going into a severe recession, even a mild recession. Obviously with Apple as a big client, if Apple has difficulty during a recession, if they sell less iPhones, if people delay their iPhone purchases, this is going to affect TSM. So those two things together have pushed it down. I mean, at the moment it's 38% from the peak, but obviously we've seen a lot of the mega companies go down way more than that. So this is fairly mild. As I said, I haven't gone deeply into analysis on this company, but let's have a look at some of the metrics of this company that we can see, get some clues as to why Berkshire might have been interested at this time. We can see that the debt to equity, which I know that he likes companies less than 0.5, this is 0.32, and interest coverage is very good. And some of the other aspects, profitability rank, we can see the gross margins 57, operating margin 47, very good. So these sometimes tend to fluctuate, I think, over time. We'll see that in a minute. Net margin 42, return on invested capital 35, which is very good. And also return on capital employed 31, which is very good. If the average is about 15 for an S&P 500 company, so this is double. And I know that Buffett's interested in this, Munger's interested in this, Terry Smith, another person who puts this as one of his core metrics to look for. And I find that too, looking for companies with above average return on capital employed, and this company is way up there. We see some of these metrics here where the PE ratio is about 15 and EV to EBIT is about 12. So these are good metrics. They're not, you wouldn't think that's incredibly expensive, especially for a company with a growth rate like this. So this is going a little bit more in depth. We can see some of those metrics going back a decade. So we look at return on capital employed. It's been consistently high, away above 20, usually above 25. So again, consistently very high. Other metrics there very good. Really nothing to complain about. And the gross margin's the same. If it's around 57, these stats don't take into account how they've just reported. This is going back, as Buffett would say, going back a 10-year history. I know that they like to do that. So all of these consistently high over time. Operating margin, high 30s, sometimes over 40. So those are goods for an industry and company like this. And revenue, again, just continuing to go up and up. Not incredibly cyclical. So some of the investors here that we looked at, some of these so-called gurus that are invested in this, we see Buffett with the new buy at the bottom there, but some of the other people, Bailey Gifford, Al Gore's invested, reduced a little bit. New buy from Ray Dalio's fund. Ron Barron's reduced a little bit. Stanley Druckenmiller, new buy. That's interesting. Macro investor. He's bought into this company in the same quarter that Buffett has. Just a couple more graphs here that I'd like to show you is the revenue graph and the revenue trend. You can see over time, going way back to 2002 and before, it's been a really sort of steady curve up, what you would exactly like to see, and I'm sure Buffett would like to see that. He'd like to see a long history which is why he wouldn't have invested in Apple for a long time, and then once it had a good history of consistent, stable profitability and margins and all the other metrics. And here we have the operating cash flow. Same again. It's sometimes a little bit lumpy, but the trend line is that nice curve up in the right direction. And EBIT, again, we have EBIT, the trend line, again, similar, a little bit lumpy sometimes, but overall, the kind of curve that you love to see as an investor. So those are some of my thoughts on why Berkshire might have bought TSM and why at this time. Let me know in the comments if you agree, or if you've got any more comments about TSM. I'd love to hear that. And if you want to see more, if you're new here, subscribe on YouTube to see more like this, or in your favorite podcast app. And I'll see you again.